Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. We are the original recyclers. No suits required, just guts and hard work. Here is your host, Brett Eckhart.
You know who we are. We're back, Chad and myself, to talk about the market. No formal introduction needed. I got the brains of the operation with me, and I'm just here to talk shit and try and convince him that the market should be up 50. And he's here to tell me that the market probably is down 50. You know, Bulls versus Bears, August 2023. What's up, Chad?
You know, I feel like the Bulls versus Bears, it's good exercise for me, because after I get all these data points, it really does. If you get a lot of bearish data points, a lot of bullish data points, you can really, just by these data points, can dictate where you think the market's going to go. This month, it's pretty split. It's about 5 neutral, or 5 negative, and 5.
Isn't there like a quote somewhere along the line that says like there's like lies, damn lies, and then there's like statistics? And like you can manipulate the statistics like however you want.
No, this is quality data right here.
Yeah, no. I was thinking about that. You were talking about statistics, and I was like, I feel like I've heard this one before, where it's like you can manipulate about any statistic, you know, with enough work. So I'm glad to hear you say though that we're fairly split this month. So let's go, man. Let's dig into it.
All right, so let's start with macroly, as we always do, with the Dow Jones Industrial Average. So we were around 34,400 last month. Now we're I think we're around 35,000 today. 35.5 was kind of earlier this week. So it feels like overall the market is feeling pretty positive. What do you think?
Yeah, I mean, well, there for a while we had like 15, was it like a record, like 15 up days in a row or something along those lines, to where, you know, it was starting to get, the air was starting to get thin up there, you know, and I think that as you can see the last few days, you know, I think that some of that air has come out of the balloon. But generally speaking, I mean, you know, we've talked about this, I think, before. If in March, you know, March, right? I see the bottom of the chart around that March 13th. If somebody would have said you're going to climb all the way back to like damn near 36, you know, 35.6, you'd be like, yeah, okay. But here we are staring at the chart, and not that that's been really bullish for scrap or commodities, because I think it's kind of went the other way. But it's definitely makes you wonder, you know, what's going on in the background. And to me, it feels like the stock market isn't a true tale of the actual economy, but it's a tale.
Well, to me, it's future guidance. It's a feeling of the future. And, you know, you think about the S&P 500. I was said the other day that if you would take out the top 7 stocks of the S&P 500, how much we'd be up wouldn't be even half.
Yeah.
So you could say the two things. One, companies like Meta and Apple and Google are still overvalued, which doesn't feel like the case. Or you could say all the other 493 stocks have some opportunity to go up, you know. So,
well, which camp are you in? Do you feel like there's the other 393 stocks have,
well, let me
493 stocks have are undervalued, or do you feel like the 7 are ahead of themselves?
Well, this is where I feel like the answer is it's like someone told me, I was listening to something the other day, and they said inflation will come in waves.
Mm-hmm.
And I think you're going to see like this crude oil chart we're looking at now. It was at $70, 70.37 a barrel. Last month, it's at 81.74. Today, it's up 16%. And so I feel like food, fuel, when we see these spike in prices, when they take supply off the market, this is a very bullish chart. And that's going to create these waves of fear, aka inflation. And so yes, I feel like we're going to continue to go higher, and those other 493 companies have chances to go higher or will go higher, but it's not going to be a straight line. It's going to be,
yeah, which makes sense. I mean, just look at that chart. I mean, it's, you know, it doesn't just go straight up or straight down. You know, there's a it looks closer to like an EKG than it looks than, like than anything else, where there's a lot of peaks and valleys.
Yeah. Well, so I've already laid on 2 bullish points, the overall market
and the crude oil futures.
Yeah. Now, to me, this is another very bullish sign, and it's hot roll lead times. So last month we were around 3 to 4 weeks, according to Argus. This month we're at 5 to 6 weeks.
And my thought process on that is, if lead times are picking up, and then I just read something on Argus as well. They were talking about hot rolled coil, and they brought the price down. I think it was $50. So it's kind of skewed both ways, right? Where, I mean, if you would think if lead times are climbing at that pace, and you wouldn't think that the coil price would be coming down at the same time, right? That either tells you that coil price was too high to begin with, or there's a lot of mills shut down. There's a lot of, potentially like buyers are coming back in the market, which doesn't really feel to be the case. I feel like there's more like less volume available per se.
Well, yeah, I think you're exactly right. And that's one of my bearish points here. On the same chart, we're seeing the pricing, the blue line. And like US hot roll, like August futures, they were at 874. They're around 821 the last time I checked. So down 6%. And you say, well, how does lead times go up and price goes down? Well, here's my next stat. That's pretty bearish. US finished steel imports market is estimated to be up 23% over the first six months of 2023. Imports,
which tells you that there's a little price pressure coming, right, on the new steel side. If you're getting that many imports coming in, then that maybe, this is just my maybe the steel mills have been getting a little bit greedy domestically.
Well, I think furthermore on that point, let's talk about heavy metal in Turkey.
Okay.
I felt like after the end of July trade, there was a lot of bullish sentiment in the market. Felt like supply had dried up, flows are definitely down, but surprisingly, Turkey's 80/20 price went from 385 a gross to around 357, a 7% decrease. And so you say, well, how can that be, right? Well, one, they're not buying very much volume. I read somewhere the export volumes of all scrap is down 33% year over year, and month over month, it being from May to July, is down 34%. So you have a lot less tons going export, and more importantly, you talk about these poor steel mills. Look at this chart. This is the Rebar-Scrap spread. I mean, they were at $325, and now we're close in that 220, 217 mark.
Yeah, but look at this. Look at the spread in 2020. It's and I'm not saying that's the ideal spread that you want, but I mean, should the spread really be $320 a ton? It's good for the investors. It's good for the steel mill. But does that either two things happen, right? Either the price of scrap didn't keep up, or steel mills got a little bit too far ahead of themselves. And I would be curious to look at a volume against the spread chart, because I feel like those two can probably go hand in hand as far as what kind of volume is Turkey exporting, because they're primarily a rebar exporting country, correct?
Yep.
So how does that export volume stack up against the spread? Are they just trying to move units?
Yeah, well, to me, on your first point about steel mills, making a few shekels, especially the last couple of years, this is an ism in the scrap industry I've heard several times is, hey, if the steel mills are making money, I'm happy, because that means the scrap guy is making money.
Yeah.
And so, I do feel like both on the scrap and the steel mill side, the second half will be a whole bunch of margin compression.
Yeah. And to that point is, I sit here and talk a lot of shit, about margins getting a little bit wide. But the reality of it is, if I'm sitting in the steel mill driver's seat, right, like I'm not doing anything different. I'm just speaking from the guy over here trying to sell scrap, saying, hey, this bus over here doesn't run on love. Like I wouldn't mind some of that love over here too. And I think that's that's the position I come from. But that being said, like if I'm in that seat, if I'm in the driver's seat, like I'm taking the same road, I'm doing the same, I'm probably making the same moves, right? But to your point, you want the steel mills to be profitable. You want the steel mills to have sales. You want the steel mills to have margin. You just want as just a lonely old recycled materials sales guy. I just prefer to capture some of that myself.
Well, I think I've successfully done that. Maybe this will be our last spot. I've convinced you that the steel mill guys are great.
Yeah. And honestly, like I said, dude, I have a lot of good relationships with steel mill guys, but also I think if your friends can't tell you the truth, then who the fuck can? Like, like, hey guys, like kick some down over here.
Well, I think it's really, I think the supply chain issues are really resolving themselves.
Yes, they are.
And with that being said, I think you're seeing we've really had tale of two worlds, being the rest of the world and the US and the steel industry. And now with supply chain, imports are up 23%.
We're noticing that on the trucking side too, like on the freight side, like the domestic freight, trucking side, like we're noticing the logistics and stuff starting to, clean themselves up a lot, it makes sense on a worldwide basis that, containers are moving a little more freely. Your bulk cargoes are moving a little more freely, and if volumes start to slip, then, you're going to be able to move stuff a lot cheaper than you once could.
Yeah. And for the Turkey steel mills, if you can buy Russian billets in the mid 400s, or you can buy, US scrap in the mid 400s, you got to go with the billets. So
yeah,
I think that's really why we're seeing this. I mean, typically these two markets go hand in hand, but you're seeing this divergence because I feel like you're finally getting some of those two worlds colliding.
Going back on the history, you have a 2020, it basically is a 3-year chart. What does that like traditionally look like on a Turkey rebar-scrap spread? Do you have, if you were to go back, say 10 or 15 years, what is that like kind of sweet spot on average number that they like to hover around?
Yeah, I think you have to throw that out and because of this chart, and you've pointed this out, the US dollar to the Turkey lira.
Yeah.
It's just massive change. So that for this reason, I think it was 160, 180 was those like pre-COVID levels. But today it's a whole nother world because of the currency, because of inflation in general. So
and I would love to look at that chart stretched out too, because I do wonder, like, is there going to come back? Is there going to be more semblance, like what I quote unquote normal? And where is normal? Is it around 18? Is it around 20? Historically, because I think that plays a big role, not just with Turkey for us on the export side, but I mean, other countries as well, right? I mean, we've seen since COVID, for all the, bad, everything that went along with it, and it still hangs around, the dollar dominance is just kind of, I mean, really put the squeeze to, I mean, I guess when I think about it, what currency has actually strengthened since COVID compared to the dollar? I mean,
well, that's Jamie Dimon said it perfect yesterday. He said, for us to downgrade the US dollar, which they did from a AAA to AA plus.
Yeah.
He said it's absurd because it's really a comparison to other currencies. So what you're saying is the only countries that have higher ratings is because it's under the protection of the US military. And so yes, there's effects, and I understand why they downgraded it, But on the other side, it's, hey, this is really a game of comparison, right?
Yes.
Like the number one's always going to win the race. And I think the US currency is like 90% of all international transactions, which is down. Okay.
Yeah.
But it's still 90%. And so that's where at times when I'm getting nervous about our debt, the US debt, and our we're spending more than we make, right? All those things, when you keep it in that perspective, I think that's where it provides a little bit more balance to people's minds.
Well, and I want to bring this up because, not the currency, the dollar, the lira, the won, they play such a big role anymore. I mean, this is like 20 years ago, this probably wasn't a really big topic of conversation, at least, or as major of a topic of conversation as it is today, right? Because of the international trading that's going on with, between all countries. And I think that you're foolish to not pay attention to the ratios, the currency ratios, and say, okay, like, why? I mean, there's so many factors at play. It's not just Turkish demand. It's not necessarily rebar spreads, scrap spreads. There's just so many other factors that have to be taken into consideration, such as, the dollar, the US dollar, the Turkey, like this chart. I mean, regardless, what is that? Is that like a 70%, just roughing it in my head, like 60-70%, decline in value to the, think about that. Like we get really our underwear in a bunch here in the United States over like 5% inflation, right? Like you're looking at a chart that's like mind-boggling, if you're sitting there in Turkey with, your liras and you're going like, my buying power, especially from the US or whatever, is getting crushed.
In 1 year. And this chart is, think about July 2022. So that's 1 year you lost 65% of your buying power.
Yeah. To me, you just have to kind of really like blink your eyes a few times and be like, well, no wonder there's a lot less scrap leaving the United States shores going to Turkey. Now, leaving other countries' shores, maybe like there's probably a lot more scrap that's a little more appetizing out there for them than our scrap, right? So,
all right, I'm gonna leave you with I got two more bullish points for you.
sweet.
I guess on certain grades.
And then we'll be done, and then we'll let everybody go make their trades for the month, and let's let it rip. Okay.
On talking about currencies, talking about inflation, really. Nucor, our last earnings call, they said they're operating at 84%, which is down substantially from year over year. Still good, but
yeah,
it feels like we're getting close to the bottom on like at least the obsolete scrap market. To me, I feel like inflation really has caused different levels. Like I'm surprised that even at what we're paying today for scrap, that we're quote unquote bottoming out. It feels like we had more to go in my mind, just based on historical information. And so what are your thoughts there?
I think we've talked about this a lot, but it's very regionally driven, right? Like right now, because there is that, and I think I have 2 points to that question. One, when somebody told me a while back, this is still a really good price, at whatever, mid 300s or like low 400. Like this is a really good price still, for you to be saying no. And I was like, but the cost associated with processing, shipping, that scrap has went up dramatically as well. So it's hard to just say dollar for dollar, $400 scrap is way better than, $300 scrap 10 years ago. Like, I don't know that it's that much different, right? Like, because of the cost associated with actually delivering that scrap to a steel mill. Now, I also believe that regionally, if you're an export primary facility and you have no choice but to kind of move your pricing down, because the dollar has been on a tear. you're having a harder time getting other countries to, commit to buying scrap in US dollars. And I think that your domestic steel mills regionally, like the Midwest, and I'm looking for you to shed some light on this here in a little bit. I would assume that with river issues and transportation issues and that it's, and maybe volume issues, that now all of a sudden, what should be maybe a down month, maybe isn't, just for all the other extenuating circumstances. And we're not talking about very many miles apart in, how the pricing gets structured. So I'm looking forward to your input on that.
Well, last year I remember Argus wrote a great article about how if you own a diesel pickup, you go out and pick up, 2 tons of scrap, you get paid a couple $100. You probably spend $100 in fuel. Like, is that worth it? And it just feels like I think especially this year, you've seen one scale levels, both region and it's different regionally based on freight, right? But it seems like, man, once we get below that $100 mark on the scales for peddlers, it's a tale of two worlds. Like, flow just completely cuts off.
Yeah. All right. And discussing, like, to say even the Midwest, because I've got some friends up there and they're talking the market, is actually up on obsoletes, right? And there's some up money to be handed out for certain grades. And I was asking him, I'm like, what's driving that? And he's like, I think it's just flow. There's just not as much scrap availability out there. So they're actually seeing up money on certain grades, which I was kind of surprised. I thought maybe this was a soft sideways market, at least over here in the West, right? Or Rocky Mountains, or whatever region you want to call us. But I was looking at it like potentially a soft sideways market. Now thinking, well, I mean, depending on what everybody else does, maybe it's not, as bad as maybe one would predict.
Well, we're going to use generic numbers, and these are generic yields, but I think this answers your question perfectly. These are Argus Media's national averages or Southeast averages numbers, but they got heavy melt at 290. So if you yield 90%, that's around 320, 330 cost.
Yeah.
Shredded at $400, that's at 450. And when you're printing money and you're just blowing it and going, you care less about this fact. When you're down to 84% operating rates or less, this is what comes really, really important. And you can see in green here is the cheapest grades, turnings and heavy melt.
Yeah.
Significant cost savings.
Which, ultimately, and then you factor in, the different blends that you're making. Every steel mill is a little bit different. Every steel mill's got their blend, their cake, right, that they like to make, and they know what the ingredients they need to make that cake. And depending on what your position is, like month over month, or depending on what's available in the market this current month, and it may not be all the way the guidance, hey, maybe number one HMS is a little bit better deal than shredded, but there's not as much shredded out there, so we're gonna have to go maybe kind of pick some of that material off, right?
Yeah.
This reminds me, I've probably never said this, but so internally, we make a chart just like this, and I have pricing for shredders, and I have pricing for steel mills. I calculate in my average backhaul. I calculate in freight miles, right? And this is a chart that my CFO Brian built. That dude's he's the brains of the operation, right? Like I'm here with all the crazy ideas, and Brian's the one that says, okay, let's organize this and make this actually make sense. So kudos to him. But we plug in the pricing, and we know our backhaul value, and we know what it costs us to run that truck or that rail car, and we just say, here's the math, right? Now I give my transportation guy the leeway. I say, okay, we may lose $10 going east or west with HMS or shredded or whatever that is, but if it's a customer relationship, if it's if it's something that we've committed to previously, that I'm willing to take that hit on the load or whatever the tons, knowing that there's a longer term vision. I just basically say, here's the keys to the car. And I would assume, and this is just kind of me making an assumption, you could probably shed some light on it. The steel mill melt manager says, you know, I need this many tons, this many, you know, of whatever for the month. And then you build this chart and say, okay, how can I most cost effectively get the ingredients for the cake and make everybody happy? Is there a lot of similarity to that?
I would, yes, but I also would think every operation is completely independent. Every melt manager has a completely different way of doing things.
Okay.
Working for a steel mill, 10 years you had told me there's an art to making steel, I would have said I would think it's a science, right? But today I feel like there is an art to making steel, and so I have way more appreciation for the art of making steel versus the science because of the results that I've seen working for a steel mill.
And when I see charts like this too, it gives me, don't all you scrap guys don't get mad at me for this, but it gives me a little appreciation, a little more appreciation, I guess, for steel mill buyers, because there's an art to getting the ingredients too, right? There's the relationships, there's the, you know, what's the most cost effective, what's the, you know, what's logistically, you know, where am I bringing the material out of? There's a lot of art. You know, they've always said, you know, the best business minded individuals have a very good combination of art and science, right? They have a little bit of art bone in them and a little bit of science bone in them, and that's kind of what makes you, you know, kind of more well-rounded. And I feel like as you get into these positions where you're trying to figure out what materials are available at what cost and what you need, when the relationship's involved, there's some art to that dance.
Well, it's just like buying scrap for your scrapyard. There's both an art and a science, an art and a math. So I think there's a lot of similarities there. That's for sure.
So the bull in me says, if you got HMS, you got some PNS, you know, or turnings, like maybe you're in a good position to negotiate. Pig iron, push lean. You maybe you have a tough road to hoe, you know.
Well, I think we got to give credit to you, Brett. Around May, you said, hey, if I had to take a position, I would be short steel, long copper. Here we are today in August. Copper was around 360 then. It's around 399 today, or at least it was last Monday. And steel probably fell, you know, $50-ish a ton. So you did it, my friend. You nailed it.
Even a blind squirrel finds a nut, you know, like that's the game, right? But going back on that chart, and if I genuinely think, I mean, copper obviously is kind of hit 402 or something like that, and then it kind of broke back down to that 385 range somewhere today. I think it's 385, 386, somewhere in there. I feel like there's still a good push coming on the price of copper. I think we get back above 4, and we probably push, you know, even a little harder. So how's that for a prediction that's probably will go the other direction? But I don't know. I just feel like there is some potential momentum there. I mean, you start really trying to see what these governments are trying to shove down people's throats as far as, you know, alternative energy and everything else. I mean, to electrify everything, man, you need copper. I mean, you need a lot of it. So, I mean, I think you're in a good position, my fellow recyclers, if you are dealing with copper or have the ability to process, you know, whether it's number 2, number 1, or you know, bright. I think you've got there's a bright future ahead. So,
well, I love your prediction, and you know, I think if you got margin in it, sell.
Well, and trust me, yes, there is that component. Like I'm in agreement. When the copper hit $4, I got rid of a load of copper. I didn't fuck around and wait until 420. I'm just saying, I feel like there's enough momentum to go. Yeah. And if it hits $4 again, I got a few more that are probably going to go down the road. So if I would have smart, I would have sold all 3 of them. But you know how it goes.
Well, thanks again for another Bulls versus Bears here in August.
Absolutely, man. And I do appreciate the charts, and good luck to everybody out there negotiating their August material. Every region is going to be a little bit different, but I'm thinking there might be a little bullish action on a couple commodities for you this month. Have a great month, and we'll see you in September.